Okay, hello everyone. Welcome to this weekly trading roadmap with myself, Miltos, in taking the place of Alex Haywood, where he usually does his FX and commodity streams at 12 o'clock. However, he's not in the country at the minute, so I'm taking over for that. So what I usually do with these weekly trading roadmaps, for those of you that don't listen in at the earlier stages, go through the event-driven risks and cover a very theoretical kind of risk and money management plan that I set into place for my week. Obviously, this is my risk and money management plan. I think for those of you that are in trading and trade your own capital, you have to be catering your risk and money management plan according to what makes you money and where your edge lies. So it's very, very much a subjective sort of thing to look at, but we'll take a look at that in just a sec. So just covering in terms of the events and data and what we have during the week. Monday's very quiet. Overall, really the main thing today is just the Fed's cap line, which is speaking today. So I've put overall low relevance for today and 15% risk allocation. Only reason why I've got a little bit higher risk allocation than as I usually would on a Monday. I don't tend to give myself high risk allocations on Monday because still kind of a bit chillax from the weekend, I would say. So I'm trying to get myself into the mode of trading. But however, there's a few little decent sort of market structures that I saw in the beginning of the week, and as I took a look at my charts on the weekend, so I gave myself a little bit more risk this morning and this afternoon as well. So 15% risk allocation for Monday. We'll take a look at those structures in just a minute in the Bund and the Euro Stocks 50 futures. Coming into Tuesday, we've got the German CPI, the UK CPIs, PPIs, and RPIs. And then from the central bank perspective, with the Fed's Harker, Williams, and Lacker speaking on Tuesday. So just keep an eye on them later on in the day. We've got a medium relevance overall for that day. And I've given myself 20% of my risk for the week on Tuesday. Moving on to Wednesday, we've got the European industrial productions, the US PPIs, and the main event probably this week for me, the retail sales out of the US. Keep an eye on that figure. Way more important than the NFP in my opinion, and I think by now the market has seen that. In terms of when we actually spotted this figure becoming the main one, I think Futex I've been looking at this for over a year and a half now, and just that shift from the Fed looking at the jobs numbers to what the consumer is actually doing. This number gives us a heads up on how the consumer is doing in the US, and that's important because, as we know, the US GDP is made up predominantly of the US consumer. So that is why we look at this figure so much. So high relevance for that day. Also, we've got the ECB is not speaking on Wednesday. 25% risk allocation for Wednesday. Moving over to Thursday, we've got the European CPIs, the Bank of England bank rate and asset purchase target. Not really expecting that much there, but let's just keep an eye on this because especially we've seen the Brexit fears come into play as well. So I'm, given there's a bit of that sort of on the backdrop, I don't really think the Bank of England wants to come out too hawkish, and we've seen that in recent times. They've actually been leaning towards their dovish side. All central banks, really, even the Fed, have been kind of leaning on their dovish side. Keep an eye out on that for Thursday as well. We've got the US CPI as well on Thursday. The Fed's Lockhart and Powell speaking. High relevance for myself, 25% risk allocation. Friday, US Empire Manufacturing, Industrial Production, the University of Michigan Consumer Confidence, and then the Fed's Evan speaking on Friday as well. Overall, nothing too big for me, but I'm giving myself a 15% risk allocation for that day as well. So those are the main event-driven risks for the week. As I said, this is pretty much my money management plan for the week. So, for those of you that are listening in for the first time, what I'll do is give myself, let's say, theoretically, if my risk for the week is 1K, which is not 1K, but I'm just saying for example purposes, I'll take 15% of that 1K, so 150 pounds for, let's say, Monday, 200 for Tuesday, 250 for Wednesday, Thursday, and 150 for Friday. That's kind of theoretically how I would split it up. But obviously, I've come to terms with what my figure is for the week and what I'm willing to risk on a week that fits within a monthly risk framework as well. So I'm looking at a daily, a weekly, and a monthly risk framework because, obviously you do your figures every month. You have certain targets every month. You've got to fit your risk to, to meet those targets as well. So that's kind of how I look my risk and money management plan for those of you guys who are listening in for the first time. Moving over to some of the markets that we look at every week, the Bund and the Euro Stoxx 50. So as we usually do, we look at the Bund. Now the Bund had a very interesting formation coming into this week, particularly something really strange. We don't normally see it on a weekly. Right here we had a 6 TPO ledge, and if you guys remember speaking about this in the weekly market wrap, we mentioned this is very, very strange, very peculiar, and that most likely this was going to go. This is a really poorly auctioned high, what we would call. Better auctioned high is something that leaves a bit of a tail, so comes into an area, rejects that area because sellers see value there and they sell it back into an area of percepted values. You can see a VPOC down here or a VPOC in here, but this is a very poorly auctioned high. And also, if we take a look at the dailies, obviously if we toggle this, you can see we actually had a daily double top. So there was a double top formation here, 5 TPOs there, another TPO there. So double top, which got taken out this morning. It was also an inside day break. So the inside day was here, if I'm not mistaken. I think the inside day high was at 13.9s. We took that level out. We had a bit of a move to the upside, quick move to the upside. I mean, obviously it did play around in the morning session. Wasn't really that clear cut because we basically opened just above that price, so it wasn't that clear cut. But eventually, when we took this area out, we did have a swift move to the upside. No continuation. Volume came right back inside. So this as a setup technically is a great technical setup. We got back below this double top area, so noticing that there's no buying interest above here. Got back below the inside day break as well, and then we kind of flagged around here for a while. And if you take a look, untoggle this, we take a look here, the value area high of last week came in at 164.35. Value area high. So we were kind of flagging around here, building a bit of a bottom, a base around this area. Eventually we took this area out and we tested the weekly VPOC here of last week. I think it was 164.24 if I'm not mistaken. Took that area out, and I remember very, very distinctly on the price ladder, we got through 24s, we got through 21s and 20s. I think we got down to about 19s initially, and then we bid up to 21s, and then at 21, somewhere around here, I think it was this area here. You see that higher volume node, that HVN here. It was someone just sat there absorbing and reloading on the offer non-stop. I think he reloaded about 1,600, maybe 2,000 contracts in one go. Someone just kept trying to buy at 21s, wasn't having it, kept reloading, and eventually whoever was buying here gave up, lost the battle, and we saw that flush down, and we effectively now come right through the value area of last week. From 164.35 we've tested all the way down to 163.91. So all in all, in terms of auction theory on a market profile, in terms of false breaks of a double top, in terms of a false inside day break, this was technically had so many things lined up in your favor if you were looking for the short side play. So this is now played out. We've come through that area. Now, whether we continue to the downside, obviously, yet to be seen, and we're going to have to judge on whether we can actually build any sort of value below these 91s now. We know this is our value area low. We have also an eye behind 50% around the same region. So really what we're looking for the bear side, that scenario is, or that scenario slash hypothesis is, if we actually break through those 91s, find an offer around that area. So if we can hold that area as resistance, then maybe we might start traveling and testing slash auctioning a little bit lower, potentially to test last week's low at 163.43. Now do bear in mind for the last, I think 1, 2, 3, 4. So 1, 2, 3, 4 weeks, we've had a one time framing. So we haven't taken out a previous weekly low in the last 4 weeks. So bear in mind that if we do take this little weekly low out, it could be, a re-entry of two-way flow. We've had basically one-way flow to the upside. Now, if we break this low out, we might start seeing a bit more two-way flow. We've already seen a bit of two-way flow now, but through this low here, if we can actually hold below that low, we might start seeing even more flow to the downside. So just bear this in mind, guys. Obviously, something to keep in mind. It's not necessarily all that bearish just yet, but we have seen a little bit of flow to the downside we haven't seen in a while. And overall, the shats, the bubble, even the buxel, across the board, even the gilts, the oats, they were all offered this morning. So it's kind of across the fixed income curves we've been seeing a relative offer. So if that kind of sticks throughout the week, just keep an eye on that. Generally, the best time to play for any sort of breakouts or moves in the bond markets is when all bonds are moving together. And the same obviously applies to equities as well. If all equities are moving together, then you try and play for that momentum type play. So now another scenario is obviously if we hold above these 91s, we can build a little bit more value into last week's value area, maybe fill in some of this area that you can see we've got a bit of a void in. We've already started filling in a little bit of that area. So we could potentially look to just fill this in. So it's not entirely all that bearish just yet. We've seen that setup play out, but obviously just keep in mind if we can get back above these 24s right in here and start using that as support again, there is still scope for a move to the upside. I see. So I still feel like any which way, you got to pay attention to this. Obviously, the 24s is the first one, but you want to see this back through that area at 43s ultimately for there to be a continuation. So scenarios overall, this could end up just a balance week, but for now, you've got to keep in mind the 91s and your value area high at the 164.35 as well. Right, let's move over to the stocks. So, in the stocks, what we've seen so far today is we've tried to offer down initially. If we take a look at what we've done in recent weeks, the markets managed to find an offer. We've been kind of covering this sort of structure over the last few weeks, quite in depth. The fact that we've failed to take out the high of the ECB day. You can see this is the whole ECB range, this whole green area in here. We failed to get above that. We started building, lower highs and a bit of a base in here, which eventually we took out to the downside. We saw some flow to the downside, made our way down towards these 28.48 as I've noted in here, or these weekly lows just noted in there. Failed to take out, again, the previous weekly highs last week, found value lower, and now this week we've tried dip down initially on the open. Now, just beware that every week we've kind of done this. In the beginning of the week, we've tried to rally, and then towards the latter end of the week, we've kind of come off. So it's become a bit of a pattern now. Don't get too surprised if, the next couple of days we just fill in these single prints and come off. But for now, what we have done is actually take out this the weekly VPOC down here. Didn't quite get down to the value area low, which we have at 28.07. We actually broke through the highs at at the time was 28.39. Got through the value area high of last week at 28.48. And as you can see, we've just now been ranging and building value just above the value area of last week, between 28.07 and 28.48. Now, we actually did get a really brief moment where the market had pulled back. Let me just try and split this. You could see that first TPO. Let me just try and make this a little bit bigger. So initially today, get a little bit more granular. We had the break, which was pretty decent to the upside. We actually came back and tested all the way back down to that value area high in 50% of last week, literally to the tick, which held, and now we've just kind of made our way back up after breaking a double inside candle on the hourlies. Now, for the time being, obviously, for myself, the way I see this, the scenario is, well, for me, the first case scenario is just to stick to what I've been seeing the last couple of weeks. I'm not bullish just yet, but I can see this, obviously, at least making a move back to 2 weeks ago value area low, which is at 28.82. We could likely just kind of fill this area in, which we've left as a bit of a volume and value cave. So as you can see now, we're kind of filling that in. For me, there's a pretty decent pivot around these 82s. If we can find any sort of offer around here, maybe we might try and dig back inside that value area of last week. And if we do, and we fill in these single prints, I think it's still game on for some further weakness to the downside. That's just myself. My central hypothesis is that I think later on this week, if we get weakness in the US, then likely we'll continue with some weakness in Europe, and especially if we see some weakness out of Asia as well. Considering there's been a lot of moves in the yen, which we'll take a look at in just a second. So that's kind of my central hypothesis. Obviously, if we start gaining some ground above these 82s, we're likely to make a move back up to these 29.08s, which you can see 2 weekly low areas here, also a break point. I know the weekly high of last week is a little bit higher up. Let me just try to note that in for you guys. Got that coming in at 19s. So we've got the weekly high of last week at 19s, but I will just bear in mind between 06s and 08s, it's been a very crucial little pivot area. So again, if we get above these 82s, we'll likely try and test these 08s for me. Again, if we find an offer there, still game for some move to the upside. Once we take out this weekly high, we haven't really taken out a weekly high in quite a while. So that kind of puts in a different scenario. Again, even through that area, we're still seeing some pretty thick areas of resistance. Weekly VPOC at 29.36. We've got quite a low volume node just above that. So these low volume nodes here are 29.59s. Little low volume nodes just tucked in here around late 40s and 50s areas. So there's some decent little areas just above there as well. Just keep in mind, obviously, that we've had this little cave area in here. If we do break above that, can't hold a bid and get back below here, we could just kind of fill that in for a while as well. So just bear in mind the structure now in the stocks for me is still medium-term bearish. However, we have seen some buying activity so far today. So whether we continue on the day up, we'll have to see. If we're going to turn this into some sort of trend week up, I would really like to see these single prints hold. If these single prints can hold, then maybe it's giving us a bit of a clue that we're trying to seek some value a little bit higher. That's how we see the Euro stocks for today. Just taking a look at least one FX market that I think has been kind of ruling the flow so far. And we covered this early last week before we actually saw any sort of moves. And this is why it's important, guys. I keep trying to drill this into you guys. Just keep an eye on the larger time frame structures. When something big moves, in the larger time frame, that's when you start seeing, a lot of flow in other markets as well. And case in point, if we take a look at the yen, which as we've covered recently, not only is when this moves higher, we know there's a risk on, risk off play. Most of all, risk off if we see the yen move higher, risk on if it moves lower. But it's also a carry trade, and thus that also adds to its risk off theme. It's also a safe haven, it's a safe haven currency. So you do have to keep these in mind. When the yen is strengthening, you're going to see sort of safe haven bids elsewhere as well. Recently, as you can see, we've put in this topping pattern in the dollar yen. So this is the dollar versus the yen. So obviously inversely, if we say this is moving lower, that means the yen is moving higher. So we saw this topping pattern. We've been tracking this kind of consolidation flag that broke last week. And we said if we take out this 110, we're going to probably see a very big flush to the downside, which we actually have seen. We haven't quite gotten down to the next support area, 105, but do bear in mind that's where we're looking now. Effectively, we're in this sort of range area. If we do come up and test, the 110 is where you want to be looking at. If we can hold an offer there, for me, I think we should be testing down to these 105s. Even if we don't get up to these 110s, really the test should be at 105s. And you can see that's a very big pivot area. So the next real area for me, 105 in the dollar yen. If we start seeing further flow in this, just beware. The Bank of Japan are probably looking at this. They've already made a couple of comments saying, they will do stimulus if they have to. But if this starts moving very aggressively, I guarantee you Bank of Japan are going to get a little bit more aggressive in their rhetoric. They might start coming out and saying something, they might start getting a little bit more crazy, because at the minute, the market isn't really believing them. They cut rates into negative territory here. We saw a rally up, completely outdid that. The market has just completely called the bluff on that. Just basically not believing that the Bank of Japan are going to move any further or actually achieve what they want to achieve. And you see the market's just kind of completely outdone that, and it's continued its move to the downside. There's a real case for the market not really believing central banks now, or at least the Bank of Japan as a starter. So, if they do something, they might announce something massive just because they need that credibility back. So just keep your eyes open. Keep your eyes open, keep your ears to the floor. You might see anything really in the next week or two, so long as this currency pair does continue selling off, at least in my opinion. So that's one thing at least to be looking at this week. In terms of just quickly looking at the commodity space, we could see on a weekly chart the gold has actually broke a bit of a flag formation that we pointed out, I think, last week. A bit of a flag formation. We closed above it. Now, again, we've got a bit of strength coming into this week. If we continue, really you want to see for this flag to be confirmed, to be take out the 1279 area. If that gets taken out, I don't see that being a problem for it to test these 1303s. There's a bit of a divergence with some of the other commodities, not the oil, but mostly the copper. We'll take a look at in a second. But if we take a look at oil alone, oil actually found a bid in the area we were kind of looking at. They didn't quite get down to that area to the tick, but as you can see, that massive pivot area around 34.82 is that big double top. We had the double bottom, then another double top, which got confirmed once we broke it. Now we've come back into that region, held a bid, completely engulfed this week. As you can see, completely engulfed that week. So for me, I think oil is one to be looking at, because we've now engulfed, held support. If this high gets taken out of 41.90s, we're game on for an even bigger squeeze of the shorts. And we've been talking about this ever since literally we came back into this sort of falling wedge pattern. This is a falling wedge pattern we've been looking at since literally the beginning of 2016. We took that out, came back inside, retested the other side, now broken it, and now we're in squeeze territory, guys. We've been selling off for ages. I've never had, so far, I've never had a stronger bull case in the last 2 years for oil, in my opinion at least. This is still solidly, in the long term, still looking bearish, but short to medium term, I think there's a bit of a bull case now, and we've been kind of talking about this over the last few weeks. Just keep it in mind, understand the dynamics, understand the pinch points. Obviously, we take out 34.82s. It's all if and scenarios. If we take out 34.82s, we're back into bear mode, guys. We could easily see a rotation back down to these lows. But so long as we're holding above this, I can see a case for this to test 41.90s. We test 41.90s. We could be looking at a monstrous squeeze to the upside. So just keep that in mind. This starts squeezing higher and moving higher quickly. A lot of the commodity names in the equity space are going to be moving as well. So just understand the repercussions of these sort of moves. Now, the divergence I've been talking about, gold and oil, pretty bullish. Copper, on the other hand, is not looking too healthy. After we saw that break of the inverse head and shoulders, which we've been talking about for a while, we broke very aggressively, held in this area of value, just in this previous area of, well, really, we didn't do much in here. We had two buying tails. We just took that out quite quickly. We've held in that little area. Didn't quite get up to the inverse head and shoulders target, which was around 234. Broke this inside weak, came back below this neckline, and now we're holding below this neckline. So the fact that we're below this neckline, for me, gives us a case for a test back lower, potentially down to that $2 mark, which is that really key pivot area. The $2 mark is really key. Get through there. We're in for those yearly lows of 193.65. The more copper starts moving, guys, the more people are going to start looking at China. So please understand that dynamic as well. You can look up the dynamic on Google. I'm pretty sure you'll find out why copper is so important in terms of looking at China as a barometer. All right, guys, so that's pretty much what I wanted to cover for this week's weekly roadmap. I haven't managed to look at everything, but just the main things at least that I'm looking at this week. Stay attentive, keep your ear, like I said, to the floor and understand these dynamics. There could be, hopefully there's a little bit more volatility than the last couple of weeks. It's been very slow going, but in any case, if you're not seeing that sort of volatility and you're not seeing the market move the way you'd like to, manage your chips, guys. Just manage your money. Really cut yourself down and say, okay, I'm not risking as much today. There's not a lot to do. Don't dig yourselves any holes that you can't get yourself out of effectively. So again, thank you guys very much for listening. Have a great trading week, and we'll speak soon. Bye-bye for now.